2 o'clock Eastern, 11 o'clock Pacific. I already see we got some Pacific people on here today. Just a little housekeeping. Next Monday, there will not be a community call. That is the day July 4th is being celebrated. And I took a little poll and everyone said, yeah, no. Yeah, we might watch the recording, but we're not going to be on that call. So the next call will be the following Monday after that, where we'll have another awesome guest like Mr. Matt Schoolfield. Again, just a little bit of housekeeping. There is a new crush group starting on July 9th. I think there are 2 seats left in that right now. And there is Crush Infinity. A lot of people have been asking about that. Those are groups only for Crush graduates. That's an exclusive group, so everybody can stay in touch. Again, people in VIP one-on-one can join those groups anytime they want. You just have to let me know. That's just a little bit of housekeeping. This week, we have Matt Schoolfield on, one of my good friends. He is a sales executive. I'm going to let him give his exact title in a second, with Movement Mortgage. He's coming in hot. I know he's in his home state today of North Carolina, the Charlotte area. I know I said Raleigh before, but Charlotte metro area. Matt does not produce, but Matt did produce and leads a lot of really big producers. So I got such a great response when we had John Palmiotto on with Guaranteed Rate. I figured, you know what, we need to get Matt on here just to get some more perspective from sales leaders. So I'm super excited. Matt, welcome to the call.
Joel, thanks for having me, man. I appreciate the invite, and glad to be on with you anytime. This might be the only chance we get to talk anymore. You're big, bad, busy. So I mean,
here we go.
Like just move on.
Here we go. Here we go.
The people who help get you to the spot, you just forget about it.
Here we go. Quick little ball break at the beginning of the call. Matt, real quick, you got the business what year?
1999.
1999. Okay, so we got a veteran, and we got a veteran of the housing crisis as well with us today. Matt has done every job. Matt was an originator, a manager, area manager, regional manager, divisional. Matt, what's your exact title right now for Movement? And tell us about your dirt. What dirt? What is the geography that you lead?
I'm a divisional leader at Movement, one of 3. The dirt doesn't make a whole lot of geographical sense. So to go into it would be, but there's several regions that vary from the northeastern part of the country to all the south, southeast, southwest, and up through the Midwest.
Okay, excellent. So Matt's got a lot of dirt. He's an American frequent flyer. Okay, so Matt, I've been asking everyone, all the producers, and I want to ask you this as a leader of producers, the hottest topic right now is inventory. You know, we started January 2020, 3 million houses short before people even figured out that they didn't want to be in a tiny house with their significant other while they're doing homeschooling and a kid gets knocked off Zoom every 10 minutes and wanted to move, which just created this crazy market that we were in, forgetting even about the refinances. Just we'll leave that alone for a minute where the rates were, but this crazy purchase market, which just created this inventory hole, extremely massive hole that's just never ending. The prices keep going up. The contracts are getting wackier and wackier, where people are basically waiving everything. They're almost like cash deals where people are getting a mortgage. What are you seeing, Matt, your top people anywhere in your region, in your world? What are your top people doing with borrowers, you know, when it comes to qualifying at lots of different programs? And then what are they doing with their agent partners to help them through the process? Agents are working harder than they've ever worked before. And then if your company's doing anything specific to deal with that, I'd love to hear about that. I'm sure everyone would love to hear what your top people are doing.
Yeah, so I mean, I would bet, and I think you'll agree, that the top loan officers generally are the top loan officers because they've got great partners. They've got great realtor partners that are experienced. They're successful, and those are generally the type that are educating their buyers. And so right now, I think education is a huge piece of it, because you'll ask, hey, what do you think is going to happen with the inventory situation? What do you think is going to happen with rates? What's going to happen with refinance? And you'll have 10 people on here and they'll all tell you something different. What I will tell you though is we all know what's going on. Like we all know the situation and the circumstances. So being able to educate the buyers out there, the buyers just aren't really educated in the circumstances. And still we hear stories of buyers just going like, well, what's going on? Why are the appraisals coming in, lower than what, like I've got the contract here and the appraisals coming in. So, a good bit lower. So it's education, Joel. So when we're able to connect with that buyer as a loan officer or as a real estate professional, giving them the information of, hey, here's what we're seeing. Don't just make the assumption that everybody knows, right? Don't make the assumption that everybody's, is in tune with the environment these days, but give them an idea of, hey, here's what you're going to up against. Here's what you're looking at when we start looking for homes and when we are making offers.
What are you hearing? What are you hearing about? I'm telling loan officers to be qualifying at a half to 3/4 over to protect in the market. And also, some of the top loan officers, they're coming on here and they're talking about running, someone says they're putting 20% down. They're literally running their numbers as a 95 with MI just in case. Are you seeing your top people? I mean, you said education. And I just want to unpack that, qualify that a little bit. They're spending more time with the buyers than they have. Is that a good way to unpack that?
They need to. The good ones are, because you've got to be, because the cycle's longer. So it's not, I want to buy, talk to a realtor, talk to a loan officer, put a contract and buy a home, because you're not getting the first one in most cases. I mean, it's the cycle for buying a home is much longer. And so there's much more opportunity. If the normal cycle is, from interest to close is 60 days, what is it now? I mean, 6 months? How many opportunities are they going to have to come in contact with a realtor or a loan officer in that time? You've got to connect, and you've got to pull them in so that when they are introduced to somebody else, then they're not going to bounce on you.
So that's a good way to, no one's really talked about that piece. I call that the gooey piece. Like, how gooey are you? Are the people really stuck to you? Are you creating a good gooey experience where they are stuck to you? And you're right. They think about buying something, then they start doing something about it. And then maybe we app them, we pre-qual them, maybe we half doc them, quarter doc them, full doc them, who knows? We got some docs. We tell an agent they're okay. And really, how long is it taking? I'd love for some of y'all to put that in the chat in your areas. How long is that taking? Just say the area you're in. And, Matt just said 0 to 60 to kind of get going. And then is it, in a normal market, which called normal market 2 years ago, maybe 2.5 years ago. And then this market, hey, 6 months from that. I mean, how many offers do they have to make before they get that? And what are we doing? And so Matt used the word education, and you all can unpack that many, many, many different ways. But the reality of it is the more informed your client is and the gooier you are, the better chance you have to keep them, especially through a very stressful process. I think most you all, you can do thumbs up or whatever, are, 1, 2, 3, 4. I mean, literally, how many letters do you write on different houses? I mean, how many different times? How many different ways? It's Matt, I would say, as long as I've been doing this, and I don't know if you would agree or disagree, but it's the most epically high number I've ever seen. I've never seen loan officers working harder than this.
I would say that and it could be frustrating, right? It could be frustrating, but if the loan officer is frustrated, think about the buyers. Like, we've been in business for years and years, in cases like you, like hundreds of years have been doing this. I mean,
can I flip the bird on this? Is anyone going to show this to anyone? I mean, all right, I'll do what my son does here. That's not the finger you think it is. Go ahead, Matt.
Our buyers, I mean, they've done it a couple times in some cases. Some cases they haven't. So, the value, I think, is a big part of the education. What we're seeing in appraised value, and I've had so many conversations just recently with the originators going like, well, help me, like wanted advice on how to talk through this with their buyers. Why, if I bought the house, my agent's telling me that, this is where I need to be in order to get this house. I need to be at, 370,000, but the appraisal came in at 350. Why is that? And so being able to talk through things in this environment where we have it in the past is, hey, an appraisal, and this is what I've said, an appraised value is an indication of historic value, So it's looking backwards. And in some cases, it's looking backwards months and months. The contract that you write and that other people write, that is a right now value. That is like an instant, like to the second value based on what somebody's willing to offer. So you may be willing to offer more than what the value has been historically because you want to purchase the home. And in many cases, it doesn't take a lot for you to explain, hey, you've made 3 other offers. How many did you get any of those houses? Because somebody was willing to offer more, which means that the value is higher. So it's that type of education where somebody takes the appraised value, like that's what it is. Like that's what the value of the home is. And it's just a tool.
So that everyone, that was a baby mouthful, but that was a large bomb he just dropped on you for talking with your clients. That was a really very, very well put together way to explain what an appraisal is. So, if you didn't catch that all the way, go back and watch the tape. This will be on YouTube or it's on Facebook or whatever. Listen to him saying it again about what an appraisal is versus what your contract is. Appraisal is based on historical value. Contract is based on now. And I think, Matt, the best agents they're telling their clients, even though their clients are having a very hard time wrapping their arms around it, hey, the bus left the station and it's not coming back. These prices are not dropping. They might level off, but they're not going down. So if you're just sitting around waiting for it to go down, you're going to be sitting on the side of the road and the bus is gone. And I think, somebody that's moving up, Matt, it's a little easier for them to swallow because they're making an epic profit on their house, obviously. But the first time buyers, and we have some people on this call that their first time buyers are having to pay $750,000 for a 3-2, that went for 100 over. They're the ones that are just, their hair's just on fire. They just can't. In some of your new world, Matt, up here, that's what you're seeing. Where the first time buyers are like, wait, what? And all I can say is, thank God that the rates are still really low, so those payments are not horribly high. But someone that thought they were putting 20% down and weren't going to have MI suddenly have a 95 LTV with MI.
And that's the other part. I think you mentioned it before, but the other part of the education is around down payment and around the appraised value. Like if you're planning like, hey, I've got 50,000 to put down, so I'm looking around a $500,000 home and I'm going to put 10% down. That's probably not the way to go into it. Because you're not going to get, if you're looking at things that are priced at 500, you're probably, it depends on the area. I bet you where you are, you're not seeing too many homes that are selling at the asking price. It's usually over about 10%.
Where I am, Matt, it could be 100,000 over. It could be $800,000 house, right? It'll go for 9. So more than 10% over. Yeah.
Yeah. So if you're planning on a 10% down payment and that's what you have to put down, you're screwed already. Like you're already done.
Correct. And just think, Matt, about these poor people. We got some bangers and grinders on this call right now that do a lot of gubbies. Man, these govy buyers, it's just, you just feel for them. You having to write an FHA contract in this kind of market or even a VA contract, it's just a brutal thing to get through when there's 20 offers on a house. Yeah. It is hard. And so now more than ever, Matt, I know your company is traditionally, you all were one of the first people that were underwriting pre-quals, basically underwriting TVDs. I know you moved off that a little bit, came back on it a little bit, whatever. But I've been telling loan officers, this is the best market ever to establish how important you are to the partnership by having files completely docked. Because the best loan officers, Matt, they've been on these calls. I feel like I'm a blessed guy. I get to work with a lot of them. every single one of them has said the reason I'm doing so much business, I am selling my deals through with the listing agent. And I'm able to get on the phone and tell the listing agent, this loan is literally completely docked. We are missing nothing. There will be no conditions unless for some reason they're related to the property.
And
that's it.
So
Give me the
everybody's
contract.
got the letter. Like everybody's got a letter. Everybody's got a pre-approval letter. But you made a good point there, and that was something I was getting ready to go into, is that you approach the listing agent in person, like that you're talking to the listing agent. You're not sending a pre-approval letter, but those who can talk them through it. I mean, we all know that's relationships are built closer and closer, right? Face to face, on the phone, letter, email, text, that all comes secondary. But yeah, the pre-approval, the value of it right now, because it's common, everybody's got them. I don't know how much that's doing to help those offers where you've got a property that goes on the market, and what's routine is it goes on the market. It has its first open house that next weekend, and they're asking for best and highest 2 days later because they've already got 10 offers. So what does it matter if you're one of 10 pre-approval letters? It's really coming down to what the offer is and how much.
Well, and we all know too that pre-approval is usually a load of crap. And for you to be able to talk to a listing agent, literally say, look, I know you're looking at a bunch of letters. My person, if he's in the running, is literally done. That's not a pre-approval. All I need is a contract.
Right.
You know, that is literally all I need.
If you make contact with the listing agent by phone, I would say that your buyer's chance of getting that goes up dramatically. If you have the opportunity to meet them face to face, it goes up even more so. I know there's not a lot of time for that, but I mean, those are important pieces.
And you know what else, Matt, what loan officers have said that I've interviewed, they're asking the listing agent, Sean Gaudreau's on here right now. He did this. I'm just saying this because I can see him. He's got his camera on. They're asking the listing agent, hey, you getting calls? And the listing agent's like, no. It's like 2 loan officers are calling. You know, there's 20 offers, 2 are calling. So you think as a loan officer, oh, everyone's calling, I need to get in line. People aren't calling. They're literally not doing it. We're sitting here talking about it every week. And the feedback from the listing agent to the loan officers that are doing it, like, yeah, you and someone else called me. That's it. Literally, which is to me just the most illogical thing ever. So Matt, tell me a little bit about what you're seeing, some of your best people, or what you're seeing in the market. I know you talk to recruits all the time, big producers, as they pivot away from refinances and pivot back to a very purchase-centric market. Tell me some of the things you're seeing people doing a lot of, some of the conversations you're having where you're watching as a sales leader. You know, Matt's the guy that gets to watch that report with that loan officer that was closing 10 loans a month. Suddenly it drops to 2. And he's like, what is up with that? And he goes and looks and he sees, okay, he had 8 refis last month out of his 10. And now he only has 2 purchases. You know, Matt's level, he's looking at that on a broad scale with a lot of loan officers. But these start conversations immediately, you know, with people, because let's face it, when you're a loan officer, and you go from making $4,000 a month to $20,000 a month, and you've never made $20,000 a month before, who wants to go back to 4? You know, and so to just go back to 4 and just kind of take your medicine, all right, because the refis went away, I think is BS, and I think it's a bad way to look at it. I think you want to, you know, every loan officer on here that works with me one-on-one knows they always cringe when they tell me how many units they're closing, because I always add one more and go, you better be closing that plus 1 next month. And they're like, oh, I shouldn't have told you that when they're having a big month. I mean, there's no reason for them to go backwards. Rick Sedbury just nodded. He knows all about that. So there's no reason, you know, for to go backwards. But let's face it, there's a lot of loan officers right now are hanging out with their new car they bought or at their second home going, yeah, I had a good run. You know, okay, you know, whatever, it'll be whatever. And it's not going to be whatever. I think they're going to be left in the dust. What are your thoughts on that? And what are you seeing people doing?
So you talked about somebody who was going from $4,000 a month to $20,000 a month, and you can fill in the blank there with whatever those values are and the increase is. If you are focused on what has gone into your bank account, you're going to be one of the ones that is concerned with things months from now, because you can't look and focus on what's happened and what the results have been. You've got to focus on the actions that need to be taken in order to deliver the results, to produce the results that you're looking for in the future. Right. So you've got to be able, you've got to be looking at your databases, your pipeline. How are you connecting with them? Do you have a team? Is it just you? Are you using CRM? If you're not using some sort of CRM, then it's crazy. It's a little bit insane, but how are you, again, staying in touch with that, the pre-approval database that you've built? Because I think they're people who are shopping for homes, that database is as large for our loan officers right now as it's ever been. And so we have some that will fall into this comfort level of this is one of your favorite terms, Joel. Those are my realtors and my clients, right? We approved them, so they're like there. And if you take that for granted, I'll guarantee us the surest way to lose out on that commission down the line.
So Matt, we talk about this all the time. I especially talk about this with people like you in smaller meetings, more executive stuff, but we talk about credit pulls. Okay. A credit pull is I call that an app. Okay. So if you pulled credit, it's an app, just in Joel land. It doesn't matter whether you work at Guaranteed Rate or Movement or Loan Depot or anywhere. It doesn't matter. You pulled credit, for me, I call it an app, right? So if you pull credit or you app 100 people a month, okay? And so you app or pull credit on 100 people a month. That might be an aggressively high number for a bunch of you on here. Say 50. It doesn't matter what it is. You app and pull credit on 50 people a month. Okay. And then what you do is you subtract the can't do's. Okay. A can't do means they have a credit score that is below whatever program your company offers. You literally cannot do their loan. So if your lowest credit score is 580, even on a manual, and it's a 560, and you can't do a quick repair, that's a can't do. Or they can't buy, Matt, for 6 months. I'm getting a gift from my Uncle Billy in a year, and I just want to start looking. Those are all can't do's. So you pull 50 credit, you pull 50 loans, 50 credit pulls, and you have 5 can't do's, 10%. Some of y'all might say that's low. Some of y'all might say it's high. Okay. So now we got 45 doable loans, right? Okay. And then you close 10 loans for the month. Where in the H did the other 35 loans go? Like literally, where are they? Literally, where are they? Okay, because your pull through is like, what is it? Well, it'd be 20% without the can't do's. Take the can't do's out, I don't know, 24% or something like that is your pull through. Where did everything else go? Your job is to find people who know people who need mortgage loans, become best friends with those people, get them to refer the people to you. Your job is to get the loan. So you spent all that time getting it, and now it's gone. This is exactly what Matt's talking about. So the best loan officers in the country are not letting that happen. They don't have 24% pull through. By the way, excellent pull through is like 40%. And by the way, 24 to 40 is a big jump. Okay. If you're closing that many of the doable ones. And I mean, this is kind of rolling forward 45, 60 days. And I know these numbers are a little skewed because it's taking people a little longer to buy, but they pretty much always work out in the end, Matt. If I take a calculator and really look at it, it works out. And what we find is these quote unquote pre-quals, these qualified people vaporize into thin air. They just vaporize. And you are correct when you say the best loan officers are nailing, in my terminology, Matt, the BIC PP system are nailing it, meaning they are all over these people that are a quote unquote loan app. You know what I mean? That have had their credit pulled. Because as far as I'm concerned, you're pulling credit. Okay, you're serious enough to let me start looking at stuff. If you're just kicking tires, you're kicking tires. Matt, is there anything else your people are doing? Are you seeing, I'm hearing this from other Macs, that events are coming back, like the agents want to get out there. Are you seeing some of your top people starting to do more stuff? Anything else besides the being all over the pre-quals?
Oh no, with agents for sure. I think a lot of the things have been lifted from a COVID standpoint. And look, I spend a lot of time in Florida and Texas. I don't know if they ever shut anything down in Florida or Texas, but for certain, having people out there getting to events, seeing your agents face to face, that excuse is gone. Like the excuse of, hey, I can't go in the office because I can't do meetings, I can't do sales meetings. That is by the wayside. Like pretty much everything's is opened up at this point for your real estate agents, and you need to be back in his office.
Matt, you got one of your people. There's a bunch of people on here, which is really cool. But Patty, your Louisiana honcho. Rick Sedbury's on here, and Rick and Brian Chamberlain just did an agent event 2 weeks ago that I was at, and they packed the house, man. Those agents came out, and some of them drove 35, 40, 40 minutes to get there, and man, they were there. And I've done other events, other places already as well, and everything is packed out. I mean, they are showing up because they want to be out. Look, they've been out doing stuff, but they want to do stuff like that. They want to do stuff where they are together. And we did them outside. We did the events outside. The events were done outside, but they showed up. So, I mean, I think you're right. And everyone, what Matt just said is big. He said that excuse is over. It's true. They want to be out. And if you're not out doing B2Bs with them, somebody else is. And that is not what you want going on right now. That's a quick ride to the car lot where you'll be selling cars when there's no more loans or when there's no more refis to help pay your bills. I mean, and that's exactly what happens. Go ahead, Matt.
If that's your backup, there's no more cars either.
You know what? I was just going to say that. I'm going to Matt. I'm going to RJ's roast. Tried to rent a car on August 7th. There's not a car in San Diego on the 7th. There's literally not a car to rent.
I rented a car for 2 days in South Florida from Hertz, and it was $450
for 2 days. 2 days. And that was not a Ferrari, I take it, correct? It was not an exotic rental, right?
No, it was a Chevy.
So everybody, since we're coming up on 2:30, and I promise you all to keep these to 30 minutes. That's the feedback we've gotten. I think Matt dropped a couple of good bombs, especially education. But man, that appraisal thing, I thought that was awesome. If I was originating loans right now, I would have written that down as he was saying it. An appraisal, I mean, it was just great the way he said it. So I would go back and watch the tape. You know what, Matt, say it just one more time before we boot everyone. But before you do it, Matt, best way to find you, Matt@movement.com if people have questions.
Matt@movement.com. My cell phone 704-968-7166.
Okay, Josh, do you mind throwing that in the chat, please? Do you need to hear that again, Josh? You good? Okay, I think he's doing it. Okay, John Hess is stealing it and saying it. Matt, give it to us one more time because I thought it was awesome on what you should be telling your clients about appraisals. One more time.
Clients and lesser experienced realtors too, because there's
Correct.
A lot of realtors in this business that probably shouldn't be and probably won't be. But they're coming in asking about appraisals and why is my appraisal, like why am I contracted? Why have I put a contract in for X amount and the appraisal's coming in a good bit lower than that? And so what I've coached people on is that appraisal is an indication of historic value, and the historic value is months in the past, up to 6 months in the past for these comps. And you can all look and see what's happened in the last 6 months and what's going to happen in the next 6 months is things change. So the contract is the value now. That is what you're willing to pay, what others are willing to pay right now. The appraisal is just an indication of what people have paid in the past.
That's awesome. Guys, that's a big takeaway. What a great way to explain that to agents and borrowers. That is a foolproof way. Matt Schoolfield, I know you're extremely busy. Hopefully we'll get to cross paths somewhere and grab some food. Just got to say it's some kush. We'll be able to grab some food, and I will wear the purple shirt. Thank you so much for your time. Everybody, this is on YouTube, Facebook Live, every Monday, 2 p.m. Eastern. Next Monday, we will not be here, though, observing the July 4th federal holiday. Monday after. See y'all then. Got another great guest. Thank you, Matt.
Thank you, Joe.
Appreciate it.
Bye.
See y'all.